Hi everyone, today is Saturday, November 27th. I'm Marv Eisen, and I hope you had a very happy Thanksgiving. As you know, Emini trading on Friday, November 26th, the day after Thanksgiving, was a truncated affair with trading hours from 9:30 to 1 p.m. If you've seen my previous videos, you know that I take the time to calculate Taylor's book method numbers to establish a trading zone for the following day. And on Wednesday, the day prior to Thanksgiving, I calculated the Taylor's book method for the next trading day, which was Friday, which was this day that you're looking at. And those numbers came out to 46.54 for support, 47.01 for resistance, and Wednesday's close was 46.98. Now I do these calculations for several reasons. The first is that Taylor's book method is usually reliable at showing us where the market is likely to trade based on previous days' trading ranges. And so it establishes a target of a low and a high and a trading range in between them. Plus, I also put the previous day's close on the chart because this is also a target price. As the market generally, not always, but generally, if it opens up with a gap up or down, the price most of the time closes the gap, closes the window. As we all know, Friday wasn't a normal day, not just because it was a shortened trading day, but because overnight, previous to Friday, there was a huge decline in the market due to the announcement of the Omicron COVID variant. And when that happened, the market dropped significantly, which skewed our numbers, since these numbers are based on averages of the previous several days. And so these averages, of course, don't take into account this big overnight drop. So I sent an email out to my students telling them to be wary and cautioning them that they might want to sit Friday out. I calculate Taylor's book method support and resistance, and I look at the previous close as target prices. When these black swan events happen, my advice is that you not trade. And the reason I say that is because I like to establish prices where the market is likely to trade. Now, Taylor's book method certainly isn't 100% accurate, nor is the idea that the gap is always going to close. But in general, they do give us prices to shoot for. When a black swan event happens that throws prices off significantly from calculated averages or averages where the market has been and should go, certainly according to Taylor, which is the 3-day cycle, I need not go into it for you. If you took my course, you know of this. It throws these numbers off, and I sent an email out to my students saying, you might want to sit this one out. Because look what happens. Even if you traded on Friday and you jumped on at the open, you were down 15 points within 5 minutes. And how confident would you be that the price wouldn't attain at least the bottom target of Taylor, the 46.54 number? Of course, if you stayed on, okay, great, but it would have been a guess. I typically prefer to have targets because I'm a risk-averse trader. I like to have some kind of idea where prices are likely to trade. And when a black swan event happens, as it did on Friday, I take the day off. At any rate, we'll see what happens on Monday. I'll send my students out the Taylor's numbers for Monday. They'll factor in these numbers from Friday, so it'll be a little more accurate, I think. But we will sit back and wait, and we'll see. Have a great weekend. Again, I hope you had a happy Thanksgiving. This is Marv Eisen from Timeless Dollar, and if you're looking for some training on how to trade the E-minis, check out my course at timelessdollar.com. You won't be sorry. It's not expensive. And again, have a great day, and thanks for watching. See you in my next video.